The Noble View with myself, Michelle Siegel, and Daniel Millman, CEO of Noblestone Capital, as we discuss the effects of the election on the real estate market. Hi, Daniel.
Hi, Michelle.
So we talked about political gridlock in our last video. How do you think that affects real estate?
So the most important driver for real estate prices over time is interest rates. Now, we talked about in our first video about how a more active Fed should result in lower interest rates for a longer period of time. I think that's a strong positive for the real estate market. So that's my number one takeaway. Number two is we also talked about more moderate inflation expectations. That's not bad for real estate per se. I actually think it's good for business in general. But prior to the election, maybe one of the relative arguments that we made for real estate over other asset classes was this inflation argument, which I think kind of has less teeth right now. But I think all that does is maybe put real estate more on par with other risk assets like stocks rather than being a negative. So I think my general takeaway is pretty positive.
That's interesting. So do you think there'll be a foreclosure crisis in 2021?
So that's a really interesting question, Michelle. Just to give it more context, a foreclosure crisis would probably be the largest risk to the residential real estate market in 2021 and beyond if unemployment remained elevated and people couldn't pay their mortgages. Now, in 2020, the government went out of its way to prevent that, supporting mortgage forbearance, etc. And I tend to believe that a Democratic administration would continue on that trend and prevent a more foreclosure crisis. Now, I think it's likely that we see an uptick in foreclosures in 2021, but probably not a crisis. But to be honest, if you look at the dynamics of the real estate market supply and demand right now, you have extremely strong demand from, there's a lot of liquidity. Mortgage rates are at a historic low. And at the same time, you have a really restricted supply. If you look at the supply of housing compared to where it's been for the last decade or two, it's as low as it's been. So you have really restricted supply. So even an uptick in foreclosures is not going to result in a flood of supply and bottoming prices in the real estate market. It might just increase supply more towards a normal level. But I still think that with an uptick of foreclosures, the general pressure on prices would be more upward rather than downward.
Thank you so much for that, Daniel. That's been super informative. So if you have any questions that you'd like to put forward for our next take on The View, email us at theview@noblestonecapital.com. Thank you for watching.